Hey everyone and welcome back to Money Journey. Today we are diving deep into one of the most talked about stocks in the market, Alibaba. Now, if you have been following the stock market, you know that Baba has had its ups and downs, but I'm here to tell you that I believe there's a strong case for a significant price increase in the coming year. In this video, we'll explore the key factors driving my bullish outlook for Baba in 2025. I'll break down recent performance, valuation metrics, and potential catalysts that could propel the stock to new heights. So sit back and relax. Let's analyze the different possibilities for Baba stock. For Alibaba shareholders, there is always this question in the air. When Baba stock will hit $300 per share again? Bear in mind this was the last all-time high in 2021 and there was a lot of hype in the stock at that time. But since then, Alibaba has been in a downward trajectory and momentum has lost. But it's now the time when this moment is turning up again. This answer is not so simple, and it is impossible to predict the future. But what we know is that Alibaba is a great company. In terms of quality, their business model is incredible and their fundamentals are great. Just look into our manager and checklist. In terms of revenue, they have been growing around 20% per year. They have great margins. Bear in mind, last year their gross margins were around 36%, but in previous years they have gross margins above 40%, which is really good. Free cash flow margins last year were around 60%, but in the previous years, when Chinese economy were doing well, they had free cash flow margins above 20%, sometimes around 25%, which is really high margin. And in the future, I do believe they can increase their free cash flow margin. Why? I would say because two factors. One is that economy in China is recovering, and probably with this consumer sentiment going up, I do believe Alibaba will be one of the most beneficiaries, and the economy starting growing again will be good for Alibaba. And the other fact is that Alibaba is investing in cloud AI, which is high margin business. So it will be a way to increase their margin, which will be really good, and it will increase the valuation of Alibaba. In terms of that, they have an incredible balance sheet. Their business face no risk in terms of balance sheet. They have plenty of cash in hand, 633 billion, and their long-term debt is just 25 billion. They are issuing debt to buy back their own shares, which is a way to look into management. And the message they are saying to us is that they are investing in the company and they believe in the company for the future. Returns on equity and on investment are not so great, but since margins are going up and profits going up as well, these returns will be higher in the future. This is an incredible business model. For me, they have plenty of competitive advantages. One of that is network effect, and since they are a conglomerate of various business, they can have a lot of synergy, which will be really good for the company. Just look into Amazon and you can see this business model works. And then they have been free cash flow positive and they are returning capital to the shareholder, a lot of capital. They are issuing a dividend and they are buying back a lot of shares. So this is a sign of confidence in the company for the future. But in terms of valuation, of course, Alibaba looks cheap. They were trading at $300 and now they are down around $100. But look at these fundamentals. If you look to the revenue and free cash flow positive, they are trending higher. Free cash flow positive have been going up and down, but when the Chinese economy starts to go up again and recover, we can see Alibaba profits trending even higher. That's just my opinion. It's impossible to predict the future, but it is what the graphs are saying to us. Their gross margins were going down, but they started to recover. Returns on investment were going down as well, but they are starting to recover again. Their shares outstanding are going down. And if you look to the free cash flow per share, uh, they hit an all-time high in 2021. That's why they were trading at $300 per share. But they basically cut down in half, but they now are recovered. And I do believe in 2025, which is this year for us in the US, it can be even higher. I do really believe in the next few years we can see a free cash flow per share of around 80 yuan. Bear in mind, I will use the yuan data from Alibaba. That's why you have these crazy numbers in here. But it is a great company, and it looks like it is recovering, but it's really difficult to turn around a big economy like China. It will not happen in 1 month. It could take years. So we cannot predict that they will turn around next year and the stock will go up. But what we know, it's the momentum is turning up again. Money flow is going into China again. So this could be really good and could be a start of a new bull market on China. In terms of valuation, I will use a conservative analysis, of course. What should be our margin of safety? It is a Chinese company, so there are risks investing in China. For me, in terms of business risk, I would say this is a company that is pretty safe. Their business model is safe on China. They will prosper, and they are beating down all their competition, especially in cloud and AI. So I would say it's a low risk, but I will assume a medium risk. So with that assumption, I do believe we should use a discount rate of 14%, so we can have some margin of safety. I will not invest in Alibaba to get 8% returns. There are a lot of risk, and you guys should take that into account. So that's why I use a high discount rate on my analysis. So for my base case, it is really difficult to say. They are expecting to grow around 8% in the next 2 years. So for the next 5 years, I will assume 8% growth and 7%. It is low. Bear in mind, Alibaba is growing above 20% per year, but this is already a big company, so they are already so big on China that's gonna be difficult. But 8% is really good. So a PE, I do believe Alibaba is one of the best companies on China, and their business model is incredible. So I do really believe they deserve a premium. So, but a premium on China is different than a premium on US. Of course, it is. If Alibaba was a US company, they will deserve maybe a 25 PE, but I will try to be conservative. I will assume a 17 PE. And margins, I do really believe they can have margin around 19%. And with that, my conservative analysis on Alibaba is that they should be trading at around $136. Bear in mind, this is a very conservative analysis. Imagine that economy is turning around, consumer sentiment is increasing a lot, and next year we see Chinese starting to buy again, feeling healthy. Alibaba will be a big beneficiary. And if that happens, momentum will turn around, and animal spirits will be around the market, and every fund manager investor will be investing and putting money on China because they will not want to underperform. And if that happens, of course their margins can grow. Their growth will be up as well. Instead of 8% could be 10% for our base case. Of course we'll want to pay a bigger premium for a company like Alibaba. We can do a P of 19, which is double than we are facing right now. And if you assume a discount rate of 9%, which is the intrinsic value, we came with a fair value or an intrinsic value of $380. That can happen really fast when you see animal spirits and sentiment changing. We see investors pouring a lot of money into Chinese assets, as we have seen last month, for example, when the Chinese stocks were up 50-60% just in 2 weeks. And if sentiment changes, Alibaba, JD, Baidu, Tencent will go up a lot really fast, and that can happen. But it will happen in the next year. We don't know, it's impossible to know, but it will happen in the future for sure. It can take 6 months, 1 year, 2 years, 5 years, but if you are a long-term investor, you have to be willing to wait until that happens. So, there you have it, a bullish outlook for BABA in 2025. Based on the recent performance, valuation, and potential catalyst, I believe the stock has the potential to reach new highs in the next year. Remember, investing in stock always involves risk. It's crucial to do your own research and consider your financial goals before making any investment decision. If you have any questions or thoughts on Baba's future, feel free to leave a comment below. And don't forget to like, subscribe, and hit that notification bell for more stock market insights. Thanks for watching.